Hello everyone and welcome to another episode of the Smart Money Show. I'm one of your co-hosts, Ali Suleiman, as usual, and of course I'm joined by my other co-host and co-founder, Naman Akhtar, as usual. How are you, bro?
All good. Finished from exams free. Had a nice weekend off. Slept way more than I should have. But yeah, just relaxing. What about yourself? How's things?
Yeah, I'm all right. I'm just on that, along with our guest today. We're just on that final stretch with exams, 3rd and 5th of June, and our last two. And we're actually filming this. We have never, ever done this, but we're filming this on the day of posting. Of course, this is a economic recap episode, which you get every month, every 4 or 5 weeks, depending on how the month lays itself out and where the Monday falls. But this is the economic recap of the last month, so of May. And we thought, let's film it on the day to get the most up-to-date news, because of course we are in very uncertain times and anything can happen overnight, and especially from day to day. So who are we joined by? Of course, as usual, it is our resident experts, our head of equities and head of crypto, respectively, Dylan Ilett and Jerome Okornoe, who have very expert knowledge within these two very, very specific sectors, as well as the wider macroeconomy as a whole. But what we're going to be talking about today before we introduce them onto the episode and get right into it? Well, of course, we'll be starting with economic data of the UK and US. We always like to start the episode off with that. It paints a very good picture for the rest of the episode. And then, to no surprise, hopefully to any of our viewers and listeners, we'll be talking quite a bit about Donald Trump. So we talk about the Trump-Saudi deal. We're talking a bit more about Trump versus Powell, which we touched on briefly in the last recap episode. Some tariff updates in regards to China, EU, and some other trade deals from both of our experts. Nvidia earnings and the shock that came with that, which of course we will get into if you missed it. UK has released some new legislation on crypto, so we'll be talking and diving into that, which is something, of course, Jeremy is very, very keen to talk about. And of course, for some of our last season viewers, we do like to talk about Tesla on the economic recap episode, so we'll be talking about their troubles recently, and finally finishing off with some other brief crypto news, some bigger headlines that we might have missed and forget to mention throughout the episode. But without further ado, very excited to get into this episode as usual. I'd love to welcome my experts onto the podcast. Jeremy, how are you?
I'm doing great. Lots of stuff happening recently. We're coming in towards, well, it's Q3 already. So the last 2 quarters of the year, and just going to be jam packed. So I'm just excited and yeah, just happy to come on the podcast and talk about the recent developments.
100%. And Dylan, how are you, bro?
Yeah, very well, thank you. Weather's starting to pick up, so looking forward to that. And obviously, we've got our last exams coming up this week, so once that's dusted, get started with the internships.
1,000,000%, exactly that. But listen, I don't want to do more any small talk. So Naman, do you want to kick off with some UK economic data?
Yeah, so of course, as promised, we do like to begin the conversation by talking about like the wider macroeconomic environment. So Dylan, I'll start with you then. What is the UK economy looking like? What figures do we have, and what's the recent developments in this past month?
Yeah, so obviously we spoke about the UK multiple times before, and we've mentioned how the growth outlook recently has been relatively bleak. However, we've actually had some surprising yet positive signs in the first quarter of 2025, with GDP increasing by 0.7%, which is actually higher than any of the other G7 nations. So at the minute, the UK is actually outperforming peers, which is due to multiple factors. First of all, commodity prices have remained relatively stable, which means that effectively a lot of the UK companies are involved in either oil or minerals or materials. So then big hitters inside the FTSE 100 has obviously had quite a good quarter. So yeah, it's good signs for GDP growth in the UK. Despite this, we still have a downgraded forecast of 1.4% overall GDP growth for the year, which was actually 1.7%. So whether this is going to come into play or not is a different story, but I think it's very good signs for the UK at the moment in terms of GDP growth. However, inflation actually reached 3.5% year over year, which obviously has been caused by increasing labour costs and obviously the main thing, Trump tariffs, which is obviously going to put pressure on a lot of UK businesses because over 50% of the companies in the UK source mainly their revenue from the US. So obviously this is going to be quite a big strain on UK businesses, and obviously it's affecting growth. And obviously in quarter one, unemployment data we received for January going into March, and we lost over 115,000 jobs in the first quarter, which is actually, I believe, the highest since 2007. So it's a very sort of volatile period for the UK at the moment, with mixed signals, with high GDP growth outperforming the G7 economies, but then also inflation and unemployment rising is causing some issues.
Yeah, 100%. And that, to be fair, you've answered some of our follow-up questions. That was a very holistic overview. But kind of final one on this. Anything that further stood out for you, kind of like any talks by Starmer or any of his party or any opposing parties, or just like a plain investors' reaction to this month? Are they still quite cautious on UK assets, or has that sentiment starting to change a little bit?
Yeah, so obviously there has been a trade deal announced with the US, which obviously we'll touch on soon.
Yeah.
But obviously, I think the main issue in the UK at the moment is more of a domestic issue. Obviously, we're looking at general election pollings, these popular polls, looking at if you could have voted again, who would you have voted for? And obviously we had the county council elections as well. So I think at the minute there's been more focus on sort of our domestic political landscape, and obviously with the rise of Reform UK, I think Starmer's really been trying to focus on how we can sort of mitigate their overall growth and popularity on a domestic scale. So I suppose really, signing these trade deals with someone like President Trump is going to increase his reputation slightly. But obviously, I think there's more issues on a domestic scale with UK assets, which obviously we'll touch on. But we've had a good year so far for UK financial assets.
100%. But yeah, I think it's, as you said, with the UK's overdependency on the US and then that fact together with all the tariffs, I think the next few months, I think that's when the more impact and the general trajectory will be properly, I guess, analyzed. But over to you, Jeremy, then. So let's talk about US economic data. What's been happening? What's the data looking like?
Yeah, so just to kind of ladder on from what Dylan was saying, I completely agree. Just from my research and observations too, the UK looks a bit more stagflationary, which just essentially describes the combination of slower GDP growth combined with high inflation. So that's definitely interesting to see, because I know that Trump, just looking at the past, when he's in office, his main goals essentially is to have high GDP growth, the stock market doing well, so that it reflects his excellent leadership, right? So essentially, that's an interesting observation to compare Donald Trump to Keir Starmer, and understand if the UK is being led properly. What does that mean long term for the next 3 years? So, of course, this is definitely something I recommend, because if you're an investor, and of course do your own research, I'm not a financial advisor, but um, what I'm doing is just allocating my capital to where I see the most growth for the lowest risk, essentially, in my opinion. And I think like, using contextual analysis, just looking at the broader playing field and the different confluent factors, you're going to definitely maximize your return. Just looking at things like the economic environment, of course, and who's likely to kind of ensure that the economy is doing well, right? Okay, so looking more at US economic data in specific. So May 13th, we had CPI come in at was expected at 2.4%. It came in at 2.3. So that's actually a good sign to see. It was a bullish sign. However, we got the China news, right? There's a lot of news with Trump, which I'm going to go into later, as Dylan and I are going to definitely delve into that, because it's a very meaty topic. But just to cut it short here, inflation came in lower, so the CPI reading, and of course the labor market is not looking too bad, really and truly. Um, the Yeah, so essentially, just to cut it short, I think looking at the next FOMC meeting for this month, that's going to be a big telling sign to see where the Fed Chair Jerome Powell, where his head is at. We need to kind of understand if he's still operating under the paradigm that he needs a bit more time. He's still acting slow, not cutting rates. The market's not going to like this. The S&P is actually been quite strong. It looks like a V-shaped recovery. However, this can take a turn. We can come down to form a higher low given the FOMC goes bad. And typically, again, looking at history, Q3 tends to be slow since algorithms are not trading, people are on holiday, fund managers aren't as active, and volume. So price and volume, sorry, volume and liquidity drives markets, and essentially
Yeah.
those are the two things that I guess we need to see if it's gonna lead to any like volatile moves in the next 30 to 60 days.
Yeah, 100%. And of course, as we talk about in every episode, a lot of it does rest on sort of the FOMC and the Fed, etc. And I am very excited as usual because while uncertainty isn't probably the best for investors, it is quite interesting to talk about from an outside perspective as well. But final question on this, Jeremy. How are markets digesting all this? How are you digesting all this? Are people still betting on cuts? Are they walking that back? What's the same sort of question I asked Dylan about the UK? What's the sentiment like just in general when it comes to investing in the US?
So I that's a very great question, Ali, because just gauging time and this is just the perfect time to mention it, so I can kind of just remove it from what I was gonna say later. I just might as well say it now since it's relevant. Uncertainty is the number one word I would say to describe the sentiment, the environment, and how to kind of not guess, sorry, but gauge when trends may shift. And I do think S&P is going to make new all-time highs very soon. It just depends on when Powell and Trump can come into alignment. And even Trump and Powell had a meeting. I think it was last week. I don't have the exact date on me at the minute. However, they had a meeting and Trump was pressuring him to lower rates. Essentially, that was the speculation behind it. Of course, it's closed doors, so we don't know exactly what was said, but we can easily guess through Trump's tweets exactly what he said, right? But anyways, just a
Yeah.
quick one. Just a quick one. Trump, his tariffs. I'm not sure if Dylan's going to mention this later, so I won't go into it too much since it's a lot to cover. But his Trumps got blocked. Essentially, they got deemed illegal. The initial one in, I believe, late February, if not March. I think it was March. Those tariffs got deemed illegal, which is massive because we saw a record we saw a record tax collection of 16 billion last month. So that was, well, in April. We're in June now, and that's the second largest monthly surplus in US history. So that's
Wow.
insane data. Ask any financial professional and they'll tell you how insane that is. Um so if so it's likely that, well, it looks like it's already been spent. Looking at a specific data point, image is quite blurry, but it looks like the US Treasury outflow from the looks of it, and it was extremely high. So it looks like that money's been spent already. Um so if it has to be refunded somehow, then yeah, it's gonna be insane what's gonna be happening in the markets. We're gonna be seeing some very, very nasty dips. And yeah, it's a cause for concern. So I'd say definitely keep your eyes on that. But yeah, that's mainly the main thing I can describe. Just linking back to your question, uncertainty. We have Trump and his game plan. I think is all a strategic thing from Trump is manipulation. Clearly, there's so much things going on, and obviously Trump has some sort of plan, and he's just pulling strings here.
To be honest, I know Trump's caused a lot of uncertainty, but like the way he's attacked it by, implementing these strong tariffs and then, working backwards in negotiations is smart, to be fair. Like, let's give him credit where it's due, but uncertainty
Completely.
is a strong thing that he's done. But talking about uncertainty though, we know that Trump has been going and he's been visiting the Middle East a lot within this month, and there's been a Trump Saudi deal. So Dylan, could you just talk to us about what's going on with this deal, and has anything actually been said, or is it just proposals right now?
Yeah, so obviously, as you said, Trump's been visiting the Middle East a lot. So this was on the 13th of May. He went on his quote unquote Gulf tour. And I mean, the main piece of data, the main news coming out of it was this $600 billion pledge from Saudi Arabia to invest into US companies. Now, this was mainly in defense companies, but also, I suppose, the key one and the big hitter, which we'll get onto as well, Nvidia. So effectively, Nvidia have secured a deal to supply over 18,000 Blackwell GPUs to Saudi Arabia, which is to a company called Humane, which is an AI startup in their public investment fund, with plans of over several hundred thousand GPUs supplied over 5 years, and building factories in Saudi Arabia. So the Bank of America actually estimates that over $15 to $20 billion in total spending, equating to roughly $3 to $5 billion in annual sales for Nvidia, which is obviously going to increase their revenues massively. Also, we have AMD as well. They've signed a $10 billion deal with Humane as well, to supply AI chips over 5 years annually, including GPUs and CPUs. So obviously, we know that Trump has obviously been wanting to put tariffs on these chips, because obviously he wants to put a lot of restrictions on China. But this almost offsets the loss for these big chip makers not being able to trade with China, or at least supposedly not being able to trade with China. And obviously it's been good news for Nvidia and major tech companies. Obviously we also have companies like Google, Salesforce, being included in some sort of a deal as well. Yeah. So overall, for the technology sector, it's been good news, this deal. And obviously it shows that there's quite a strong alliance between the Middle East and the US at the moment, which is not really something that's been apparent in historic years. So I suppose it's a step forward, and it has brought some good news to the overall US economy and US business landscape, considering the amount of volatility in his tariffs decisions.
Yeah, 100%. I think the specific point there that really stands out to me is, of course, as you mentioned right at the end there, how it kind of differs historically to what presidents have really had. I mean, it's a clean black and white deal with Saudi, so it's not something that a lot of presidents have been super, super proud to just really just kind of say like that in a blasé way. But I mean, Trump's been doing a lot with the Middle East recently, and I don't think he's going to be stopping any soon. Of course, what we saw, I think the Qataris gifted him Air Force One, basically, like literally like a Boeing, and a fully like specced out Boeing. It's just like, it was pretty mental.
He was put under a lot of pressure after that, wasn't he?
Yeah.
For accepting the gift. Because,
no, of course, 100%. I mean, it's like people thinking, it's almost like these Middle Eastern countries, Saudi specifically, holding loads of sports events, for example. It's like sports washing, just trying to cover up what they want to cover up. And so maybe this is, in Saudi's mind, this is an in to further deals with the US. And that leads me on to my next question, Dylan. Do you think we're going to see more activity between Trump and Saudi in the other sectors, in more in larger deals, in more important deals as well, that will affect, maybe a little bit of US's foreign policy as well? I know it's a bit of a loaded question, but eager to hear your thoughts on it.
No, I definitely think so. I suppose sort of reaching that deal with Saudi Arabia doesn't just mean future business with Saudi Arabia. It also means with the other economies in the Gulf area. So, for example, there was potential talks of a deal with Abu Dhabi, for example, or with Dubai or Qatar. So I definitely think that will be the case. Obviously, especially in these areas, there's sovereign wealth funds that are growing at an unprecedented rate. And obviously Trump has explained how he believes it's important to have foreign investment into the US. And obviously with these major technology companies leading the way, especially in AI, I have no doubt at all that we will definitely see more investment from the Middle East, and definitely some more strategic partnerships there.
Yeah, about the Middle East, I think, that first step's been taken, but, what's going to follow through after is something that we're going to view over the next few months. And the latter part of this year. But Jeremy, now we've got your favorite topic coming up, Trump versus Powell, and I know you love talking about this topic. So tell us what the narrative is like for Trump and Powell, and has anything happened in May that should be noted by us students?
I'll just say Trump's comments and moves against China is just what Powell's monitoring and how that affects the data. Of course, there is a lot of rate cuts priced in for the rest of the year, but that could easily change. And I'm more. What comes to my mind is what happens 2027. That's a massive thing. I think a lot of market participants are not considering. It's likely that the stock market just continues to make all-time high after all-time high. However, a lot of people will buy the top and essentially round trip all the gains from um, 2024 onwards. I 100% believe there's going to be some sort of unwind and some sort of crash. You know, we had the Yang cash carry trade in 2024. We had a lot of different things happen, and I guess there's still like a lot of bandages put on a lot of wounds. So the underlying problem is not solved. Just to kind of address the question, Trump versus Powell, I'd say Powell is literally just looking at the data. That's all he could work with. That's all he can really do. And nobody blames him. We have famous um, investor and veteran in the. He's a very very big trader and investor, Peter Schiff. He was making comments about what Powell was doing and some of the decisions because it's a bit erratic. His tweet, he said today a court exactly ruled what I said from the beginning. The power to tax lies with Congress, not one man, and tariffs must originate in the House. So if House Republicans want to impose tariffs, let them vote to enact them. And that's completely true. Like if one man's controlling the show and you can't really predict what's going to be happening, then I guess the Fed's just gonna have to sit on their hands and maybe just remain to um, see inflation come down in a controlled manner than trying to rush into any decisions that can have long term reparations, right?
Yeah. Yeah, I mean, it's something I think we will be continuing to have brief updates on in the next few episodes. As you said, you're looking onto the next couple of years, and it is just still kind of crazy to me. And I know a few people, of course, with Trump, there's so much going on that a few people have kind of gotten used to it. But to me, it's still kind of crazy that we're even having conversations like this. I mean, it's simply, as people have said, and in America, it's quite a common word nowadays. It's just unconstitutional for a president to even consider to have a say in replacing, the Fed in any sort of circumstance or any sort of aspect, because the whole point of that body is to step in as an independent, because the president's made some sort of error or just whatever, or just like underestimating markets, etc. I mean, as I'm sure our listeners and viewers know. But what do you see happening in the near future, Jeremy? What are the scenarios that we can see kind of playing out, kind of like worst case, best case, in your opinion?
So I think a reporter actually tested Trump's masculinity. She fully grilled him. She went in. She's brave to be challenging the president like that. She
Yeah.
fully said, I'll read it out word for word. She said, so she replied to what Trump said, and she was just questioning him, asking him if, like she said, Trump's always chickens out, essentially, since he was lowering tariffs. And that one comment can lead him to retaliate, to just show that he's
Yeah,
the
no,
type
of
of guy to do
course.
what he wants. So
100%.
this is crazy stuff. Like I have more stuff in terms of crypto later on about Trump and um how crazy things can get essentially in terms of moves to the upside. But again, you could look at physics, you could look at markets, psychology, because a lot of technical analysts believe that the market is driven by human psychology, which I 100% believe myself. I think there's a lot of investors in the market who, how does the market move up? It's just individuals buying in, right? So there has to be some sort of psychological aspect to the market that leads people to make decisions to buy. Everyone's looking at the same information, of course. Some people are faster to have that edge to process the information. They have algorithms, big team, institutions, stuff like that, of course. However, it's still like the underlying motivations or the underlying drivers of the market are fear and greed, human psychology. So I think just looking further on, it's likely that we can get a massive move to the upside since Trump. You could look at what he's done before. He's likely to repeat his, his previous kind of attempts. But best case scenario, I'd say he just decides to work with Powell and just reduce these tariffs. He's got essentially banned, and I'll speak about that a bit later. And with what he posted on Truth Social, about Pepe the meme coin, which is crazy, but yeah, he fully got banned. He's obviously appealing this. He's the president, of course. So we'll have to see what happens with that. But and this is big stuff. This happened 28th of May, so literally 2 days ago. So if we recorded earlier, like you said, Ali, this news would have been missed. So yeah, like things are happening every day. I'm sure news will break today, news will break tomorrow, news will break on Wednesday.
Mhm.
Yeah, markets
Yeah.
are just yeah, there's a lot going on at the minute. But best case scenario, he works with power. Worst case scenario, he kind of drags us on longer so that the last maybe 2 years of his time in the election, the economy is the way he wants it, essentially.
Yeah, I think just worst case scenario in general is that nothing certain is put in place. Whether he's done with Powell or whether he stays with him, just that we're in a grey area right now is not what we want to be in. Just as you said, Jeremy, that uncertainty, it's a tough area to be in right now.
Yeah, no, 100%. And it's still crazy to think about it. Imagine you're told like there was this extent of uncertainty back like a year ago within America, like
Yeah.
the safe haven of the world. It's crazy to think about it. But Jeremy, moving on then, I'm going to stick with you to start off this topic. Let's talk about tariffs then. So what's been happening? Like I know we've trickled like a few facts and figures throughout this episode, but what's the current situation and what's being said around China and the EU?
Yeah, this is another massive point. So the 10-year yield is surprisingly high. It jumped above 4.5%. That is, ask anyone in markets. That is insane. Like you don't see this in a lifetime. This is something that has not been seen in a very, very long time. And Trump's come in office, and we're seeing the unexpected. Me personally, as a trader in the market, it's very, very interesting. You have to observe the volatility. Um, Again, there's a lot. I don't want to kind of digress from the main point. However, yeah, like the 10-year yield came above 4.5%. So my general expectations from this is just that we may see higher inflation for a lot longer than people actually realize. And this is just going to cause commodities to skyrocket to the upside. And this means, Bitcoin is a commodity. People that disagree, man, Bitcoin hit all-time highs a few weeks ago. S&P didn't. Clip that. I'm clip farming right now, but essentially, it's true. The data does not lie. What do they say? They say markets is the ultimate source of truth. Well, there you go. Like,
Yeah.
we're just gonna see Bitcoin. So my personal target for Bitcoin is about 140K. I do see Bitcoin hitting that number. People are predicting higher. A lot of funds and um institutions that have interest to say higher targets just so that other people FOMO and feel like the cycle will go on for a lot longer. Of course, they're saying 500K, 200K, which is 100% possible. Don't get me wrong, but um, in the bear market, it's smart to set your take profit targets in the bear market. So at 15K, 16K, 17K, I was thinking 120K would have been the top, but just looking at certain things, 140K, 150K seems like a reasonable target. And yeah, I think gold can continue to soar. Oh, I take that back. Like maybe it just ranges for a bit, but I don't see gold coming down too much. But the main point is just around this whole point is the fact that yields can remain high. This may mean higher inflation and commodities continuing to do a lot better. And we had, people like Mr. Walls or Brian. So Brian Mast from the Republican, he's a Republican congressman from Florida. Essentially, he predicted that the S&P would trade way higher than 10K. So that's interesting to see. I do think it will do well, but again, I'm not really attaching and specific price targets, I need to look at, well, I think everybody needs to look at an array of different factors to really make decisions to where we may potentially top. Anything else? I think Scott Best. So last thing, Scott Besson was talking about the deficit as well, and his exact comment was a deficit not being as important as you can outpace it with growth, which makes sense. But again, like you're not really fixing the underlying asset underlying problem. So that was just something interesting to observe.
Yeah, no, 1,000,000%. And Jeremy, I hope you'll. I remember we were speaking in the uni, and I was like, I always have a top, and I never get out. But I actually got out at the top. Semi got out, so I hope you're proud that I finally stuck to my word. Investors' greed didn't creep in. But no, Dylan, pretty much, I'm going to pose the same question to yourself. Obviously, there's a lot bit happening with tariffs, and it will always be on someone's mind, on the market's mind, for the very, I think, for the foreseeable future. But equities wise, and just the wider market as a whole, what's the thoughts?
Yeah, so in terms of what's been happening, really, we're first of all we'll look to the UK. So there was a deal announced earlier this May, mainly on steel, aluminium, which has led a baseline tariff at 10% on the UK. So actually, the UK has actually came majorly better off than a lot of peers. The EU, Trump has spoke about increasing tariffs to 50%, but then has later extended the deadline, which seems to be a repeat and then another repeat and then another repeat of what we've been doing since Liberation Day. It's just extension. And it sort of links with Jeremy's point here. It's more of a strategic move. And with China, there's been some de-escalations in their trade war. Now the baseline tariff on China is to be 30%. Meanwhile, on the US into China is 10%. So there's been some relatively stable news in that sense. But I suppose the big one is the issue with the US court ruling. And effectively, this came into place the end of the week last week, and effectively said that the US Court for International Trade deems Trump's tariffs as illegal. And this is because it was previously labelled before as an emergency quota that had to be filled out. He had to obviously impose tariffs because of our trade deficit and issues like that. Actually, the court has deemed his decisions as more, as we said, a strategic goal, and he's effectively using tariffs for leverage, which obviously is what he is doing. So tariffs are put on hold. We're waiting for more of an approval, whether this will come into play. And to be honest, it's led the S&P to rise 7.5% over the month. So this has obviously been great news for equity markets because obviously the lower the tariffs, the more economic activity we have with the US. So obviously we're looking at the FTSE 100 up roughly 7.5% over the year. The S&P is up roughly 0.4% over the year, but it's actually rebounded massively in May, as I said, reaching roughly 7.7% in May. And this was obviously due to strong earnings, corporate earnings, but mainly due to tariffs. And actually the S&P rose over 2.7% on the day that the US court actually ruled against Trump. So it seems that the market sentiment is shifting towards opposing tariffs, and I perfectly agree with it as well. So again, we're just going to have to wait and see what actually happens with the US court here and whatever Trump comes back with, because I'm sure he's going to have something up his sleeve that he's going to try and appeal it with.
Yeah, it's fun to see how many like different, for lack of a better word, mandates that Trump is running right now, because he's got, of course he's got his own personal interest, and he's like, okay, how's he going to keep people like Elon happy? Because of course a lot of Elon supplies come from China for his batteries and whatnot. But I guess you're going to speak about that soon later on in the episode. So I think, so Dylan, I'm going to stick with you then for the next topic, Nvidia's earnings. So could you talk to us about what's been happening there, and then what this recent earnings report says about Nvidia, and is there anything surprising?
Yeah, so Nvidia actually last week reached its highest share price since February. It jumped 5%, and this was due to a very positive earnings report, despite all of the commotion about tariffs. And obviously, as we know, these earnings have been over the past 3 months, first quarter of the year. So obviously, this isn't necessarily an indicator of their performance with tariffs being introduced. But yeah, so first of all, we look at revenue. So revenue rose 69% year on year in the first quarter to $44.1 billion. EPS is up 26% over the year at 0.7 cents. And also, we had some good guidance for the next quarter. We're expecting a 2% increase in revenue, and that's despite an expected loss from the H20 export ban. So it seems that the business model right now for Nvidia is remaining relatively resilient. Despite tariffs, and obviously, as we said, with these deals from the Middle East and the cooling sort of sentiment with the trade war between China and the US, it seems that the technology sector, and mainly Nvidia, looks set to go on a little bit of a rally again, despite these market fundamentals. Because as we say, I think we're entering a new era with stocks
Yeah.
and shares, and I do think that investors definitely ignore economic fundamentals more now, and it's definitely driven by more opinions and short-term news. And obviously, we see that in the amount of volatility we have in markets. So I do think that even though there's underlying problems with the US economy, I do think we'll see the technology sector having a bit more of a rise, and I think Nvidia will be leading that front.
Yeah, couldn't agree more. And again, leads me on to my next question. And you did my work for me, to be fair. How did the rest of the market and especially the technology sector react to those earnings? And what do you expect them to do in future? Because they obviously realize, just as you have, that Nvidia will probably continue to lead the charge when it comes to the tech sector continuing to boom and change and really evolve the equity market, and they're going to want to have a say in trying to stop that and trying to make it about them. So what's the mindset when it comes to thinking about that as well for you?
Yeah, so obviously on the day, obviously Nvidia rose 5%, but we had the S&P rising roughly 2.3%, and it's a difficult one to call. I would say that the markets are definitely confident about this. This has definitely brought some optimism into the market when we've had such a poor year for the S&P 500. But I think really it's been a combination of things with the mix of the tariffs and strong corporate earnings in the US. That has driven market sentiment, and obviously the trade deal as well, because it wasn't just Nvidia involved. Obviously, like I said, we had Salesforce, companies like Uber, Spotify, Microsoft, and Google involved as well. So I do think there's positive signs to the market, which is why obviously the S&P's lagged behind Nvidia and rose on the same day as well.
Yeah, but I think especially with the sector being like so, and there's its supply chain being so like global, and with the environment is right now is very uncertain. I think, I know we say this a lot, but yeah, it's in a very like wait and see area. But now for the next topic, then let's talk about the UK's new recent legislation on crypto. So Jeremy, tell us about this. What's going on?
So yes, essentially, there's a lot of interesting developments going on with the UK and crypto. I will make a few comments on crypto AI and how Nvidia has affected that section later. But looking at the UK and the breaking news really for crypto, we had Prime Minister um, candidate Nigel Farage essentially, and he's very well known. Um,
Infamous, I think.
but yeah, infamous guy essentially, and he's actually kind of trying to get a Bitcoin strategic reserve bill approved, which is interesting. So, of course, I'm not sure how far that will go, but he is a capitalist and he wants to see the UK have um, more, I guess, investment from other regions because the US have made steps to essentially boost their GDP. So, if this goes through, this is a move towards technology, to innovation, towards Web3. It's an investment into the future. It's a step to kind of bring the UK up to speed with the rest of the world, essentially. So I guess, yeah, you have China absolutely making massive moves when it comes to AI and technology. US, Donald Trump, he's coming now and he's making the right steps as well to really um, welcome innovation and I guess the kind of capitalist viewpoint there. But moving on, we have Reform Chairman Zia Youssef saying that if we don't have Bitcoin in the sovereign fund, the country will be far poorer. That's a very, very. I don't think a lot of people would catch on to that. Please just look into it and understand the weight of that statement there. I think it has very long term effects if the UK at least don't start to make moves towards just uh, kind of competing in the technological space, right? So I guess those were the kind of main topics when it comes to the UK. So I'll update it in the next recap episode. So just conscious of time, those are the main points that I want to mention.
Yeah, and I think obviously it's a new piece of news and developing as well. But I mean, I know we normally 99% of the time we stay impartial on the podcast, but I'm guessing our viewers and listeners won't be surprised to say I'm not a reform voter. But but it's almost annoying to not see this legislation even be talked about by other parties. Although Starmer is, I mean, I don't know if you saw his speech. Was it a Jaguar Land Rover or something? And he mentioned like Nigel Farage like 16 times. So he's obsessed with the guy, but he doesn't speak about a possibility of a strategic reserve. And of course, flip side of the coin, we know Nigel Farage and the Reform Party, especially Farage himself, just loves Trump, loves what he's doing. So of course, Trump talks about a strategic reserve. Of course, Farage is gonna think about the impact it would have on the UK. But I think it would really be great, and I think the other parties would tap into another group of voters if they do kind of start to speak a little bit about the potential of doing so. But that statement by the Reform Chairman, very strong. Very, very strong. That's Trump-esque. I'm not very used to having that in UK markets. But yeah, it's very strong. And I'm gonna I think we'll leave it there, to be honest, because it is developing. But I think definitely we'll mention it and push it to next episode as well, see if there's any more developments on that. But I really want to see Labour talking a little bit about that, have it brought up in Parliament or just something like that, see what the wider sort of MPs think about it. I think it's worth discussing, right? Now, Dylan, surprise, it's been a while, but it's time to talk about Tesla. And literally on the structure, it's called Tesla Troubles. So I think that says enough. So they've had a rocky month. What's been driving it all?
Yeah, I've been trying to keep them out of my mouth, but it's only about time, isn't it? So, yeah, so obviously a bit of a backdrop. Obviously, Elon Musk, CEO of Tesla, he has some very big roles in the government through Doge, which obviously I've spoken about before, saying that effectively I believe that his almost irate personality and involvement do pose a detriment to Tesla. So, yeah, so there's a few issues Tesla's been experiencing. First of all, are boycotts. And this has been due to obviously Elon Musk's involvement in politics, but also sharing his far right opinions on a global scale, which has obviously led many people to boycott Tesla. We've seen videos of even Tesla drivers just being shouted at on the street for driving the Tesla, even though they bought it because they liked the car. So obviously, from a reputational standpoint, they're in the mud, to be honest. And then when we take a look at their share price and their sales, so actually the main concern here is Tesla's European sales that fell 49% in 2020. And this has been either due to tariff related disruptions, but also because Tesla's overall business model. I have some discussion points here talking about sort of their lineup for their cars and their vehicles, and consumers feel that Tesla's vehicles are outdated. And with competitors like Volkswagen releasing new EV vehicles, their sales are increasing. And also, I suppose the key one, BYD, obviously a Chinese manufacturer of EV vehicles, actually overtook Tesla in European sales in 2024. And they're on the rise. And obviously, with less restrictions on China and China becoming a stronger trade partner with other people around the world. Yeah, so Tesla's sales in Europe is down, and obviously it's really not good news for the share price, which is down roughly 40% over the year.
Which must make sense. Well, when I see like, BYD's growing presence within this EV market, especially in the in like this side of the Atlantic, it's like, I mean, not giving any financial advice, but you can just see it, slowly just collapsing on itself. But we've also seen that Elon's actually taken a step back from the government. So do you think you could see like a recovery on the horizon if he's focusing his attention more on Tesla?
I don't think so, and that's purely because of still how supportive he is of, for example, Trump's tariffs and economic policies. And I think when you have these groups of people that obviously will arrange these boycotts, I don't think people forget. Like here we have activist groups, like one's called Tesla Takedown, or another one's called Everyone Hates Elon. So like when these things come into play, I think it will take him a long time to sort of build that reputation back. And if it's backed by actually releasing a worse value product than competitors, obviously it's going to cause issue for Elon Musk. And I think I remember seeing the other day a reporter was asking Donald Trump about his drug issues, his drug abuse. So obviously, also leading X as well. Obviously, if Trump's having issues with other social media sites, but he's able to speak freely and say what he wants on X, obviously you know who is behind that. So I don't see any way how he could really gain his reputation back in the near future. I think there would have to be a drastic sort of political shift in his viewpoints, and definitely a strategic change in Tesla to really enhance his reputation and abolish these activist groups.
Yeah, no, 100%. And even if we look, I know it's gone past intrinsic value now, but even if we look at Tesla's products intrinsically, I mean, my dad owns a really old 2019 Tesla, right? And I'm tempted to put my dad bought this car before Elon Musk went crazy sticker on the back of it, to be perfectly honest. But genuinely, it's even intrinsically, like Tesla has started to slow down, I think. What's the word I'm looking for? Development-wise and just innovation-wise, and BYD and stuff like Polestar and even like these already viable and developed manufacturers going into the electric market, they're all starting to show further and further innovation, getting closer and closer to where Tesla used to be and where they are looking position-wise, maintaining right now. And it's just crazy. And I think you're right. It's quite crazy to think that it will only, the stock and its and their revenue will only really be affected by a political shift by obviously the guy that's behind it. But it will be interesting to see. I don't see a political shift coming, but I mean, it's been just kind of crazy. I feel like every month's been kind of crazy for Elon, but sometimes it feels like it's out of his control. I mean, obviously when he announced he was stepping back from government, he had a black eye and he said, yeah, my 5-year-old punched me. And I'm just like, it's just pretty random stuff that happens. And it's just, I don't know. It's just, for me, I don't want to see a CEO of a company or director of someone on a board of directors of a big company saying stuff and that's acting erratic like this. You want again, it comes back to what we say all the time, but you want certainty. You want someone you can put your faith in, place your bets on and have them come back. But yeah, obviously Elon isn't that person. But yeah, as Dylan, as you said, we could talk about this for ages. But it's been nice to talk about Tesla for the first time in a while. But
yeah, I'll just say quick comments on Elon and Nvidia quickly. So of course, Nvidia has a big effect on crypto. Crypto can be viewed under the limelight of technology, which has a decent correlation with the Nasdaq. So yeah, it's interesting to watch Nvidia earnings and see how that affects crypto because they do correlate. So if the Nvidia earnings are bad, crypto and specifically Bitcoin would move down. And then of course, if they're really good as they were, then of course we had a nice reaction and Bitcoin went to all-time highs. So I'd say just mainly long-term views on Nvidia, just my personal opinion. So I had it up just a second ago. Apologies. Let me just control T. So yeah, essentially Nvidia, you have the CEO actually selling shares. So it looks like long term, this is something that I've seen time and time again, essentially, since I started learning about markets. So the specific number was 735 million worth of Nvidia shares he sold. That was last year, but May 29th, he's filed to sell about 6 million. And you can go back to 2024 and see exactly what happened with the price when he did sell. About it was 735 million again for the guys watching. And you can see that the price actually had a big move to the downside, lower lows, lower highs for an extended period of time. So it just goes to show that the timing of when the CEO sells, you have to have your radar on. I'm not messing around with my investment when it comes to that, especially in crypto, because crypto is very manipulated, especially the altcoins. So you're kind of used to just monitoring the top holders. Crypto is on chain, so you can kind of see it instantly when a big institution, big whale, actually sells, which I will touch on in a second, since there's been massive stories on that. But I'd say just for Nvidia, um, you have Bar Chart, a big institution called Bar Chart. They're claiming this insider trading from Nvidia, and I'll not be like surprised to see Nvidia trade extremely low in the next bear market. Not gonna lie, so that's just speculation, not actionable. There's no real nothing you could do with that statement there, but it's just general thoughts at the top of my head. Now, looking at Elon and Tesla, so from the top to the bottom, when we had this Trump tariff headline, and there was a lot of comments between the relationship between Trump and Elon. So a lot of people were saying that they may come into like they may butt heads with each other. So essentially, a power kind of battle, because Elon is a winner. He launches rockets into space. And just a side note, I wouldn't fade Elon and Tesla. Not gonna lie. Like if we see Tesla trading at $800, like that sounds outrageous. However, it's possible in markets. I would not fade Elon. He's fully locked in now. He's left office and he's gonna work on his company. And when Elon locks in, I'm telling you guys, I will not be fading it. I know a lot of high net worth individuals. Some of my friends that are investing into Tesla. Um, yeah, Tesla at the bottom, so around 200. A lot of people that I know were buying. I've not really had the time to, do my research on stocks and really find my edge. So I don't participate in the stock market at all. However, yeah, like I'm very aware. I'm still in the process of mastering um certain things before I start to delve into stocks. But Tesla, I would not be fading it. Although I don't agree with everything Elon says, I'll just question his character and his the probability of him coming back from that move. Tesla's already bounced about 67% from that massive dip, and a lot of people are still talking about the fact that it came down. They're not paying attention to the recovery already. You have Nike down 70%, it's only bounced about 17%. And you could go and look at the Nike chart. Of course, there's fundamental reasons, but um, yeah, you got to bet on winning horses sometimes. You want to maximize your returns. Although you may not agree with Elon, I think just to bring a kind of different point, a different, what they call it, like a contrarian view, I think Tesla's not a company to be fading long term.
What massive crypto headlines have we missed in this episode so far that happened in May? So sort of interesting on-chain data, kind of key technical levels you're watching on Bitcoin or Ethereum. And then also to finish off, heading into third quarter, what's your general sort of game plan or outlook? Anything you're positioning around now?
All right. So looking at the crypto news, we have a lot of institutional FOMO. This is absolutely insane to be seeing. I guess I would not, I would not call myself a veteran. I have a long way to go. I'll call myself a veteran in 10 years. However, just from experience from buying the top in 2021, again, absolutely smashed. I'm very, very, I have a lot of PTSD when I see good news in crypto, extremely good news as well, and then the price doesn't really reflect the good news. I am on high alert. I have PTSD, and I guess that's the beauty of the financial markets, man. Like, especially at
Yeah.
our age, if you participate, you understand certain things, and then you fail first attempt in learning. You know, fail is, it stands for first attempt in learning. I guess like you just improve and improve. And I think we had MicroStrategy, we had MetaPlanet, Sharp Link, which is a company as well, and a lot of different companies looking to invest into Bitcoin and use the same playbook. But again, that's a massive um warning signal, because the way they've kind of structured it is they're using convertible debt to get leverage returns from Bitcoin. And leverage, we can look at the financial crisis, 1987, multiple different instances in markets where leverage leads to massive moves to the downside. You know, Tulip Dutch Mania, the 1600s. I think, yeah, I enjoy looking at history and human psychology again, behavior when people are chasing higher returns. Because you've got to think about it. The way institutions can market now and compete with MicroStrategy is just offer better returns for their investors. How do they do that? Leverage, of course, and that's um, dangerous for the wrong people that don't know how to use that effectively with rigorous risk management and procedures to make sure that they're not underwater on the underlying asset essentially. But just side note, so FTX creditors, they're getting paid soon. That money can flow into altcoins. That's the narrative. However, that's dangerous. I'll say just take a touch. We need to see we need to see a lot more for these altcoins to run. Dominance is still at 70%. I'm not rushing to be seeing a massive altcoin season. However, I am prepared for a big altcoin run within the next 3 weeks. To extend the time horizon, I'll say 3 weeks, maybe the next 2 weeks. But like I say this, and I make sure that I have extreme precautions before I even think about taking a position. So there's a lot of things that I need to come together before I decide to allocate capital to the market. I remember the first episode that we had, I mentioned that I'm not allocating any new capital to this market. That was before the tariffs, and Bitcoin tanked to about 74. We bounced up to 92. I sold the rest of what I was holding, and then we came down. First of all, I sold, then we came to 74, and then again sentiment. So human psychology, fear and greed. The stock market, fear and greed was at 4. We had the VIX spiking high as the COVID, near enough the COVID levels, and when the VIX spikes that high, it just indicates that the markets are super fearful. There's something big happening. Young cash carry trade, the VIX spiked super high as well. And you got to think about it in context. Like, the world was literally ending in 2020. People thought that the world was about to end. And if you're getting the VIX getting near that level, everyone's scared to buy. That is the exact point where you need to be so greedy. You need to be like, I'm not even gonna recommend certain things, but like if you were if you were able to take a loan, I don't know what it is, but just allocate capital when the risk is so low to the downside. You've already come down 20% already. What's the worst that could happen? Like, if you invest after the S&P crashes about 20% and then it comes down another 20%, I think you have a lot more to worry about than your 20% unrealized loss. So that was interesting. But just to move on, GME, GameStop, they bought some Bitcoin. Hey, when risk comes back, so we're looking at the Russell 2000. If that starts to spike and things with Trump later down the line, maybe Q4. Again, everyone thinks Q4, so just be prepared for crazy things to happen in Q3. So that's just a side note. Yeah, I guess that's mainly the crypto news. Just Trump posting about Pepe as well was interesting, and yeah, that's pretty much all there is when it comes to crypto. Just to kind of speed it up, I know the episode is getting a bit long, so we'll cover it next time and see if there's anything new coming on. But again, there's news breaking out every day. We can't really cover everything, so it's just
Yeah,
about covering the most important things here.
of course. No, 100%. I mean, we could do a weekly recap episode, right?
Yeah, no, 100%. But of course, soon we've got other forms of, I guess, content that we're going to be releasing, which is going to push forward, of course, our like this commercial news. So keep an eye out on our platforms. And I think another thing we should say at the tail end of this episode now is that this is not financial advice. And who knows? Is Jeremy our like Nancy Pelosi of the UK, of the crypto market? You'd never know. But yeah, do take everything with a pinch of salt. But yeah, it does seem really interesting, all the developments that have been happening, and I guess from what you've just given us, Jeremy, there's a lot to look forward to. Yeah, and I think even overall in this episode, Ali, there's so much happening in the next few months, and I think the after effects of everything that's happened within the former part of this year is going to be displayed in the latter, of course.
Oh, 1,000,000%. And always, I think a great way to finish off a month, but also start off a month with an episode like this. Always great for us viewers and listeners to sort of boost up their commercial awareness, because I don't think you get opinions as clear cut as this in the Financial Times. Although that's a big statement to make, to be perfectly honest.
I just want to add to that. Yeah, completely. Like, guys, don't do your own research. I do a lot of research every single day, and it just comes from research. Like, this is like, especially for students that are interested in finance, like, I guess it's just so fun, really. Like, you will be laughing, like, you'll be on the floor just rolling when you're seeing some of the stuff that these professionals, presidents are playing. Like, it's chess, it's strategy. There's so much that goes into it, and I guess, like, it's just learning. You don't need to invest in anything. You just need to maybe just know what's going on for a couple of years, 3 years, 4 years, and then maybe you can start to dabble in with all that experience that you've had just monitoring the markets.
Yeah. Oh, 100%. And of course, as Naman said, looking forward to getting our other content out there. We're talking newsletters, reports, articles, and some short form videos from our very own equity and crypto analysts that work under Dylan and Jeremy, giving their own actual proper researched opinions, written down and recorded opinions on what they think markets will be doing very, very soon. But of course, for our viewers and listeners, thank you so much for watching this episode. If you are watching us on YouTube, of course, and for some reason you have subscribed already, then I'm sure Dylan and Jeremy have given you a great reason to subscribe to our channel. And same goes if you're listening to us as well. You can follow us on any audio platform that you're listening to, so that you never miss any future episodes that we drop weekly with professional guests, and of course future recap episodes with Dylan and Jeremy. And please do show us some love and engagement on our social media platforms, and drop a comment wherever you want. If there's a topic that we need to cover that we haven't talked about yet, if there's a guest we should be talking to that we haven't talked to yet, or you just want to refute one of Dylan and Jeremy's opinions on this show, I'll very, very gladly pass that on to them. Trust me. So thank you so much for watching and listening. We'll see you next week for another episode of the Smart Money Show. Take care and stay tuned. Thank you.